Video we're going to look at stock buybacks and ask some key questions about them. We're going to see how they work, and I'm going to show you how you can tell if a company is buying back their stock. I'm also going to give you a few warnings about share buybacks and how they aren't always good. So what are they? It's essentially a way of returning cash to shareholders. It's similar to a dividend, you can think of it that way. So it increases your percentage ownership in the company. There's fewer shares, so each share represents a higher ownership. And it's a bit like buying out a business partner. That's quite a good analogy. So how do they actually work? As I said, they reduce the number of shares outstanding, so that should boost the earnings per share. If a company halved the number of shares and had the same earnings, its earnings per share would be twice as big. It increases, or rather can increase, the intrinsic value of the share, because the share now has a claim on more cash flows, because there's fewer shares to claim that cash flows. And it offsets the dilution from acquisitions and directors and people exercising options. Ideally, if you made a very good acquisition, you could give away shares to make the acquisition and then buy back all of those shares using the profits of the acquired company, which would do very good things for shareholders. You'd be very happy with that. Here's why you should like share buybacks. They are tax efficient. Capital gains are usually taxed at a lower rate than dividends, and you can choose when you take your capital gains taxes, so it's better for tax planning. So you should be happy about that. Often they can signal that management thinks the stock is undervalued. If the stock is overvalued, the company shouldn't be buying them back. That's just throwing money away. But if the stock's undervalued, buybacks are very effective, and it returns cash to you in a way that is probably better than a dividend. And so for the most part, buybacks are good news. You should be quite happy in general with companies that consistently buy back shares, but they are not always good. You have to have a degree of skepticism. Buybacks, as I said, work best when the stock is cheap. That's pretty obvious. And so buying back stock when it's very high is a waste of money. For example, Facebook buying back loads, using all its profits to buy back shares when the company is valued at 120 billion is not a good use of money. So here's some examples. RBS bought back £1 billion worth of shares for £18.36 in 2006. They're now trading around £3.50, and that's after a significant recovery. That's not a very good use of money. In hindsight, that is. It's done nothing for shareholders essentially. In fact, it's had a negative effect. But Amlin, which is a Lloyd's of London insurance company, bought back £75 million of stock after suffering large catastrophe losses, and the share price has recovered very well. So it got to buy back lots of shares quite cheaply. I think that's done had a good impact on shareholders. They should be quite happy with that buyback. Yes, but not all buybacks increase your ownership. This is maybe counterintuitive. You may have just assumed that all of them do. Sometimes they just cancel out options, so it just prevents a dilution, which is nothing to get particularly excited about. You ought to check management incentives, be a little skeptical sometimes. Managements are paid bonuses if they increase earnings per share or meet some targets, and they could maybe take a little bit of cash out of the business so that they can create the earnings they want. So you just have a bit of skepticism, and also establish a base value so you don't get fooled. We're very good at fooling people fooling ourselves rather, by keeping these kind of internal books that we manipulate randomly. So you got to record the number of shares when you first buy them, and record them at the start of the year, and you may actually find that the number is increased at the end of the year when you thought there was buybacks. So don't let yourself be deluded. And finally, how do you tell if a company's buying back shares? Obviously you find them in the annual reports, interim reports. Management are very fond of bragging about how many shares they've bought back. Company news feeds, if you like the Hargreaves Lansdown website, you can click on company news, and it'll say something like buyback or transaction in own shares. If you're in America, you would look at SEC filings. In the quarterly filings, you should find records of buybacks, and a good place to just look to get lots of companies together is to go into the London Stock Exchange and see the news feed for transactions in own shares, which is what I tend to look at. So hopefully that's answered your questions about buybacks. Thank you for watching.